Hello everyone, you're watching Weekly Forex Outlook by Light Forex. In this video, we will discuss the most exciting trading opportunities for the upcoming days. The US dollar suffered during the past week as the market's risk sentiment improved on hopes that the United States and China will reach a compromise in their trade deal. The negotiations took place in Beijing last week, and this week there will be more talks held in Washington. US promised to increase tariffs on $200 billion of Chinese goods from 10% to 25% if no deal between these two countries is reached by the 1st of March. US President Donald Trump said that the negotiations are a bit hard and that he may extend the deadline for a week or so. The markets are more or less optimistic. This week we expect more news from Washington and any signs that a fundamental breakthrough is near in talks between these two big economies will make the USD suffer further and will make market players buy riskier currencies like Australian and New Zealand dollar. On the other hand, if there are problems in negotiations and if the parties feel that they cannot find an agreement, then the USD will find support and turn upwards. In addition, if we are talking about the US currency, this week there will be speeches of the Federal Reserve members, and there will be also the release of the January Fed's meeting minutes on Wednesday. Last week, America released weaker than expected retail sales and PPI growth. Actually, there were declines in these important indicators for America. As a result, the United States Central Bank will likely remain cautious, and this will have a negative impact on the USD in the medium term. Let's see which other events await us in the upcoming days. To do that, we will go to lightforex.com and check the economic calendar. Here you will find the most important events which have an impact on Forex currency pairs. So on Monday, we won't have a lot of events. US markets are closed because of a bank holiday, President's Day. So amount of liquidity during the US session will be lower than usual and there may be some volatile moves. On Tuesday, Australian Central Bank will release its monetary policy meeting minutes, and Britain will release average earnings and claimant count change, two important indicators of British labour market. Germany will publish economic sentiment index for February, and you can see now that the forecast is not really optimistic, and the market understands that German economy is not at its best times now. This, together with other data from the euro area, will make an impact on the euro, and currently the euro is under pressure because of low growth, low inflation, and political uncertainty, which make investors await accommodative policy of the European Central Bank and limit the upside for the euro. On Wednesday, Australia will release wage price index, and also there will be release of FOMC meeting minutes, as I have already mentioned. On Thursday, there will be more data from Australia, employment change and unemployment rate. Also on Thursday, the euro area will publish flash manufacturing PMIs for France, Germany, and the euro area. These are the most up-to-date indicators about the euro area's economic health, so they are surely very, very important. Also, the United States will release durable goods orders figures as well on Thursday, and at night from Thursday to Friday there will be the speech of the Bank of Canada's Governor Paulos. On Friday we'll hear from the head of the Reserve Bank of Australia, Love. Also there will be retail sales figures from Canada and German IFO business climate and the speech of the ECB President Mario Draghi. In the United States, there will be also the speeches of some representatives of the Federal Reserve. Also on Thursday, the European Central Bank will release the accounts of its monetary policy meeting, and well, nothing really good is expected from that. So you can see that this week we'll get a lot of economic indicators from Australia, Euro area, and the United States, and comments from central banks of Australia, Canada, United States, and Europe. This is the main agenda for the upcoming days. Let's see what is going on at the charts. How are the currency pairs performing in these circumstances? So we have already discussed the USD, that there is a source of significant pressure from lower economic data and improvement in markets risk sentiment, and well, the US economic figures have to improve and the market's risk sentiment has to worsen for the USD to find support and to recover to higher levels. If that doesn't happen, then lower levels are to come. Switching to euro dollar, you can see that last week the pair indeed continued the movement below 200-week moving average, which is currently acting as resistance at 1.1334, and euro tested levels as low as 1.1234. However, it didn't decline to the support at 1.12 mark, and as long as we remain below the weekly moving average, this is the main support and the main target on the downside. However, last week the pair managed to close above the lows, and if we get above the 1.1345, then a recovery to the resistance line will be more than possible. On the daily chart, we can see that the next resistance levels on the recovery to the upside will be located around 1.1590, 1.14 level, and 1.1470 mark. So I would say that the minor recovery to the upside is the main scenario for the next few days. The British pound also tested lower levels last week. It went as low as to 1.2770, but then managed to close around 1.2885. On Thursday, British Prime Minister Theresa May suffered a symbolic defeat at Parliament on her Brexit strategy. However, now the market has become more optimistic because of conciliatory tone on Brexit from Irish Foreign Minister. Also, Britain released stronger than expected retail sales on Friday. However, earlier we saw that GDP growth and manufacturing production disappointed the market. So if we need to be fair about the UK economy, it is suffering and it's really contracted in December. So the picture remains very uncertain for the pound. On the daily chart, we can see that there was an engulfing candlestick and the pair tested some higher levels, opened the week with a gap to the upside. However, there is resistance in the area of 1.2925, 1.2930. Resistance is from the line which goes from January highs. All moving averages on the daily chart kind of lack momentum, and also there is the 200-day moving average around the psychological resistance of 1.30. So any recoveries of the pound beyond 1.2930 will likely meet significant resistance at 1.30 mark, and further bullish movement will be possible only above that level. So for now we are watching resistance to see whether the small longs for the bearish pound are possible. If the pound returns below the 100-day moving average around 1.2880, then the focus will once again turn to levels on the downside around 1.2820, 1.2770 and 1.27. The pair US dollar Japanese yen tested higher levels last week. However, the pair failed to close above the weekly moving averages and experienced a kind of setback at the end of last week. Support is currently located in the area of 110.30, 110. The loss of that level will lead to a decline to 109.25, where we will once again see a significant support. And to continue the way to the upside, we need to overcome resistance around 111.40. Some further levels are here as well, so the way up won't be easy. However, the fact that the 50-day moving average provided support allows for some consolidation between 110.30 and 111.40 mark. All in all, the US dollar has a chance to perform versus the Japanese yen, perform better, given the fact that the market's risk sentiment is more or less positive, and Japanese yen tends to get weaker when the market is positive. All in all, the USD has been trying to push higher during the last weeks, so it may once again gather strength at support around 110.30 and try to go to 111.40 and 111.80 marks. As for commodity currencies, they are fighting to get to stronger levels versus the USD. US dollar Canadian dollar is currently testing support at 1.3225. The loss of this level will bring us to test more important support around 1.3130, where we find 200-day moving average. On the upside, the main resistance is located around 1.3330, and only above that level we'll get a chance to test 1.3450 levels. Australian dollar recovered a bit versus the USD. Still, we face resistance around 0.72, and the next one at 0.73. The big figures represent the main resistance levels here. New Zealand dollar recovered versus the US currency, and here the New Zealand central bank surprised the market as it turned to be less dovish than expected. However, we can see that the pair will soon approach significant resistance around 0.6930, where we have this resistance line and Fibonacci level. And of course, to make a recovery on a bigger scale, to test levels higher than 0.70, we need to overcome this resistance and break the upper border of this triangle. If this not happens, then 0.6850 and 0.68 will be the targets for the pair. Gold is continuing its uptrend. It's currently trading above the 78.6% Fibonacci retracement. And if it overcomes the high of the end of January around 1326.30, then 1350 will be the level on the upside to target. Brent has formed an inverted head and shoulders pattern. It also managed to get above the daily moving average here, 100-day moving average, and it is targeting level at 68 at least. So the outlook is quite positive. Finally, Standard and Poor's index of stocks, S&P 500, also had a very positive week with risk sentiment on. It closed above 2750 and is now heading to 28 and higher. This is all for today. Thank you for your attention, and remember that at lightforex.com you will be able to open an account and trade the Forex market at the very best of conditions. Thank you for your attention and see you next week.